traded on the NSE so far. Ajay Tyagi is with us, Head of Equity at UTI Asset Management. Ajay, good to have you back on the program. Thank you very much for your time. I don't know if you have a view on PB FinTech, if you own it in one of the portfolios, or the business per se.
Prashant, as you're well aware, we can't comment on stocks. And by the way, this is one stock which we do hold in some of our portfolios. So I'll have to skip this one.
Okay, got that. I understand. The market itself, Ajay, I mean, is it, just a, in the initial stage, all the mark-to-market losses will become a little better. And then maybe one will talk about fresh new gains. That's a general kind of tendency. But what are your fund managers at UTI doing? What are you doing? Give us a flavor.
I'll give you a big picture view that we hold here at UTI. Of course, our team of fund managers are executing their strategies commensurate to what their own scheme objectives are, and therefore, different portfolio managers are doing different things. But the big picture view that we hold is that the recent bout of correction that we have had over the last few months have brought in large caps into a zone which we can call as a fair valuation zone. They're not cheap, obviously. They've not pierced the average valuations at which they've been trading for a decade or beyond and gone into cheaper territories. But at least we have gotten them into a band where we can start using our dry powder. So that's our view on large caps. I'm afraid the same view we don't hold for the mid and small caps. That part of the market, to our mind, is still outrageously expensive. People are only looking at the 20% fall from the top. Therefore, in a way, anchoring, the present price levels to what they used to be a few months back, and therefore getting excited about the fact that these stocks have gotten cheaper by anywhere between 20 to 40%, in some cases even beyond that. But to our mind, this segment of the market is still expensive, and we would wait for some more time to start using our dry powder here. Yeah.
Hi, where do you stand on IT? There's considerable amount of concern that the slowdown in US will impact the tech budgets, and therefore growth will likely stay muted for IT companies even in the coming year, and not the recovery that the analyst community was hoping for. What is the call that you all are taking on IT, large cap, mid cap, for the next 2 years?
See, unfortunately, anything to do with the US right now is as foggy as it can be. So, the views are changing pretty much overnight. They're changing every other week practically. One comment from the US president or, his team leads to a very different opinion that we hold about businesses that one way or the other are linked to the US. And since IT predominantly has its growth engines lying in the US, obviously this sector, which till about 2 months back, I would say, was looking extremely positive on account of the very steady and sure recovery that we were seeing in the US, is now, getting hammered down because of the uncertainty on account of the tariffs and, the growth slowdown that these tariffs can usher in for the US economy. So, we have to play it by ear. By the way, we don't really know whether the US will for sure. So first of all, we don't even know whether these tariffs are really posturing or these tariffs are going to be as harsh as they are made out to be right now. Maybe after a few months, we realize that this was a bit of a bargaining chip that the US administration was holding out. And therefore, to that extent, we start, seeing more surer commentary coming in from the US, in which case, IT gets back into a zone where people start talking about IT budgets being strong. In any case, the valuations of these companies are, in the fair valuation zone. So I would say IT is a sector we have to play it by ear. You can't hold a very strong view one way or the other at this juncture. You also, in passing, spoke about a 2-year view. The 2-year view on IT is positive. Look, there is enough and more which has to be done in terms of spends by corporates, both in terms of not just AI, but also in terms of cloud migration. So our medium-term view is positive. Indian IT vendors continue to gain market share. It's just the very near term which we are uncertain about. Yeah.
Okay, so the near term is a cause of perhaps a little bit of concern right now. Got that, Mr. Tyagi. Just take us through how you have modified or moderated your call on the Capex related side of the market, because, I believe the house view is that while Capex may revive, this may not emerge as the most loved part of the market. It was the big leader, right, for the last 1.5 years or so. What's your view now?
You're absolutely right. Let me also, reply by saying that the leaders of the previous bull market are usually never the leaders of the upcoming bull market. So we don't know when, the next bull market starts to get found. Maybe we have to wait for a few quarters, a year or more. But it's unlikely that, the new bull market would be led by the same theme and the same names that were active between 2020 to 24. So that's point number one. On a more fundamental level, by the way, you're absolutely right. If you look at how the government is planning to spend its money right now, the clear predilection is towards reviving consumption in this country. So one way or the other, we are seeing more money being laid out and, more, I would say, more of these welfare schemes being rolled out. The government has realized that the multiplier effect that they were wanting to see on account of Capex spends has actually not panned out. Now, economic theory very clearly states that, Capex does have the highest multiplier effect, but unfortunately, we couldn't see a commensurate impact on, let's say, reduction of unemployment here in India over the last few years, and therefore the government is keen to change its gear. That will have consequences on, growth in the entire Capex sector, whether you talk about roads, whether you talk about defense, whether you talk about, power sector and so on. So yeah, I mean, even fundamentally, we are more inclined to believe that after a gap of a few months and quarters, there should be a consumption revival in this country. Income tax rate cuts was a step in the right direction. We're also hearing about GST rate cuts. If that were to happen, very clearly, the consumption basket would be front and center. Yeah.
Okay. All right. Mr. Tyagi, thank you very much for that perspective. Good talking to you today. Thanks for joining us on the show. We look forward to more such conversations. By the way, as we move on, that's an interesting piece of news coming through for